You called the move, your direction was spot on, price hit your exact level, and still you lost money. How does that even make sense? It's because predicting the direction of the market means nothing if your execution, your risk, your management is trash. That's what most traders get wrong. And if you don't fix it, you'll keep being right and broke. If you don't know me already, I'm Kojaks Pro, a seasoned trader, and I've been at this game for over 3.5 years. A lot of debate goes around traders being able to predict the direction of the market and then that being connected to being profitable. But if I tell you that I've seen it hundreds of times, scenarios where traders actually predict the market several times correctly, but still not make money from that movement. How is it so? As a matter of fact, they can even place trades. The market will eventually get to their expected prediction level, but it gets there without them. I have seen it happen several times. At the point in my trading career, it was happening to me as well until I leveled up. So you'll be asking yourself, how is that even possible for a forex trader to know the direction of the market and predict it correctly and still not make money? I'll be showing you that in this video. So stick around to the very end. If you're new to this channel, subscribe. Now let's get into the video. I've seen this several times, especially with smart traders. You study price action, you've got the buyers nailed, but then you enter too early, use too much size, skip the stop, or close out prematurely. And then the chart still does what you expected, but then you're not on the winning side of it. These are all threats of emotional trading, and you should cut them out. Here are 4 reasons you predicted the move but still lost money. 1. Poor entry execution. You were early, you chased the move, you skipped confirmation. Being right too early is still wrong. For example, this is a trade I took on USD CHF earlier on this year. Now, my strategy says that I only want to trade USD CHF to the downside because the higher time frame barrier says we're going downwards. That means we're bearish. So this is a setup that formed, and as at this point here in the market, you can see that the price has begun to reject around here. Now, I want to trade USD CHF to the downside. However, in my strategy, I expect price to eventually come up to this beige colored zone around here, which represents my key levels, my major key levels. So this is the monthly zone. I expect price to come up here and reject first of all before I get into this trade. Now, if you are impatient because of you're trying to chase trades, you know that the market wants to go down, but you don't want to wait for your setup to form before, or give you that trigger before you can enter. Now, watch what happens when you are too eager to get into a trade. You see this happens next. Now you see this long bearish engulfing candle, and in your mind you're like, okay, I can see what has happened here. You quickly draw out your tools and say, okay, this is a head and shoulder that has formed here, and then this being the left shoulder, this being the head, this being the right shoulder, and then the neckline has been broken, and this is a very strong bearish engulfing candle. Not only that, it seems to have formed what looks like a reversal candlestick pattern right about there. So this looks very much like an evening star pattern. So this looks like an evening star pattern that has formed there. Now you take your trade, you'll be like, okay, the market is ready to go. After all, we've pulled back so much so, and the market has gotten ready. This is a head and shoulder pattern. This is the neckline. It's been broken, and then an evening star pattern has formed, which is a bearish reversal candlestick pattern. And you jump into this trade. Watch what happens. That's not even your trading setup to begin with, but then you're too eager to make money. You're so averse to lack of activity on the charts. You enter into this trade now. You put your stop loss above that. You take profit at the next zone, however you might want to trade it, and then watch exactly what happens now. The market goes in your favor a little bit, and then stops you out. So you were stopped out right about here. You were stopped out and you're like, oh my God. That happens to a lot of traders. And I'm very, very frank with you, because of emotional trading. Now, watch what happens if you actually waited for your setup to form. The other trader that was patient enough to wait, just like myself, you're patient enough for the market to get to this level, which was your intended target in the first place. Let it come and touch the monthly level and then reject there, and give you the opportunity to draw a counter trend line So this is my favorite method of, this is my favorite trading strategy. So a trend line has been drawn and you are waiting for the market to reject here, which is what it's doing right about, to reject here and then break this counter trend line. Then you get into this trade. Now let's see if the market does that, because this is a trade I actually took earlier on this year. So you can see that there have been a change of trend. The market is now making lower highs and lower lows, conforming to the overall bearish bias on the higher time frames. Now we've broken the counter trend line and we get into this trade. So as we've gotten into this trade right about here, our stop loss comes above, like you've seen, and then I take profits just like so, and then we allow the trade run. So let's see whether this will get to take profits. So you can see right about here that we got to our take profit here. Simple, easy. So this happens to a lot of traders all the time. And if you're not patient enough to wait for your setup to actually trigger you in for an entry, you get stopped out every single time you go against your rules. As simple as that. 2, wrong risk management. You risked 5% to make 2%. That's not even mathematically right and logical to begin with in the first place. So even when the market moved in your direction, just one single whip stops you out and then eventually takes the market to your expected or your predicted target. Simply put, you got nuked. Trade, no exit plan. You had no take profit strategy. You held too long. Greed stepped in, and now your winning trade is break even or even a loss. It's always that voice in your head that says, let me hold this trade a bit longer. I had someone that used to trade that way. I mean, the guy was trying for himself in a way, in terms of slugging it out with the charts, not going to ask for the aid of a mentor to see whether he can develop a strategy of his own. And in some ways, he was making money. I was actually amazed that he did have the smartness to come up with a strategy that makes him money. But then he was also losing a lot of money to the market. He wasn't profitable in a nutshell because he doesn't know how to come out. He didn't know how to come out from his trades. He was always of the opinion that the market is going to start from this level and it's going to get to this level. And as it's getting to that level, I'm just going to stand on my hands and watch the market print all the money in the world for me. I told him that's not a very good strategy because he's not locking in profits. The market gives him massive profits. Before you know it, it takes it all out. And that's not how to trade. As a professional trader, you should have an exit plan. And you should have entrenched in your system or your strategy a way of collecting profits as the market makes them available to you. 4, you didn't trust your process. You doubted yourself mid-trade. You micromanaged. You let fear or FOMO hijack the whole plan. At that point, it's not trade. It's emotional roulette. The best traders don't just predict. They execute. That means letting the setup come to you, controlling your size, sticking to your rules, and letting the math, not the emotion, play out. You're not in the prediction business. You are in the risk business. The edge isn't in being right. It's in how you manage being wrong. So how do you fix this? Starting today, use a checklist for every trade. Journal every entry, exit, and emotion. Trade a single setup until it's second nature. Never risk more than you can emotionally handle losing. Trust the process, not the price. If you've ever predicted a move but still ended up losing, drop a yes in the comments. Let me see it, because I know we all have been there. I've been there as well. It's what the baggage of the game brings. And if you want to fix this for good, download my free guide, the Trader Rebuild Guide. It walks you through the 5 core shifts that turn smart traders into consistent ones. Like the video and subscribe to the channel, and I'll see you in my next video.